Hey guys, welcome to today's live stream. My name is Lightman Chimso, and you're welcome to Light on the Chat. I'm all about simplifying your trading journey as a beginner trader. So today we have a topic called stop loss and take profits, risking properly as a beginner. So in today's class, I'm going to be teaching you guys how to risk properly as a beginner trader. So before we jump into what we have for today, let's have a recap on the previous session's topic. So last session, entry criteria, I told you guys about higher time frame bias, the location, liquidity sweep, confirmation, risk reward ratio. Today we are taking it a step further, and I'm going to teach you guys stop loss and take profits. You guys already know how to do analysis. Taught you guys how to do that. So today we're going to be talking about how to set stop loss and take profits properly as a beginner. You understand? So before we go on, I would love everyone to share, right? Hit the thumbs up and share this across your social media handle so that everybody can be a part of this class. Right. I'm super really excited today because this is a very special day for me. It's actually my dad's birthday. So I'm super really excited. And just go ahead, share, and give you guys 2 minutes, and let's kick on with what we have for today. Let me share my end. Let me share. Let me share. You should go ahead and share. Go ahead and share. Okay. Okay, so moving on to the business of today. First off, what is stop loss? Now, stop loss, I think should be displayed. Stop loss is the point where your trade becomes invalid. It's that instruction you give to your broker. So whatever broker you're using, if you don't know what broker is like your trading bank, right? The way we have our OP, our UBA, that's what your broker is. It's where you get to depositing your money and also get to make withdrawals from directly to your bank account. So that is a broker. So now, stop loss is like the instruction given to your broker by you as a trader to tell your broker, okay, if price gets to this point, I agree to be wrong, close me out in this amount of loss. So that is stop loss. Yeah. So for example, you buy something for 10,000 naira and you want to, obviously, you bought it to sell and make profit, right? And the moment it drops from 10,000 naira to 9,000, 8,000, 7,000, you tell your broker, okay, this is enough loss. I'm willing to take, close me out and sell it off. So that is stop loss. So the next thing we're going to be talking about is take profit. Yeah. Now, what is take profit? Take profit is where price is likely to react next or complete the trade move. So that is take profit. Now, for example, you buy something, the same scenario. You buy, let's say, you buy a phone, and you want the phone to go up in value for you to sell, right? Okay, let's use land. You buy a landed property here in Nigeria, and you want that land to go up in value. For example, you bought it at 1 million, and you're expecting it to go up in value to about 10 million, whatever the amount is of your choice. So you get to sell it and make profit. So that is what take profit is. That is what take profit is, as simple as that. And now we're going to be talking about the next thing we're going to be looking at is the beginner's mistake, right? When setting stop loss and take profit. Looking at the beginner's mistake. Now, number one mistake is trading without stop loss. That is the mistake most people make. I met a guy at one point, and he was like, he doesn't trade with stop loss. And I asked him why. He said because the banks they don't trade with stop loss, so therefore him too is not also going to trade with stop loss. And he's forgetting one thing: the banks they have a very large amount of capital they trade with. So trading with stop loss, it's not a thing for them. They don't trade with stop loss. They trade without it. But we as retail traders, we have to trade with stop loss because that actually protects our account. So stop loss is actually a safety net for us. So that is it. Trading without stop loss. Now you can open the trade and without stop loss. And what happens? Imagine the trade goes against you faster than you can imagine. And like what I showed you guys last week on what happened on GBP JPY or across the JPY pairs, how the banks of Japan intervened, right? Now imagine opening a trade like that and you had no stop loss. And maybe you kept your phone and came back later and you saw your account has been liquidated. So that is it. That is majority of the mistakes beginners make. And number two mistake is moving stop loss emotionally. Now, I've been a victim of this one. Now, you get into a trade, your stop loss, and now you see price approaching that stop loss, and then you edit the stop loss, you take it further down again. If you're longing, when you're buying, your stop loss is at the top. Sorry, excuse me. When you're buying, your stop loss is below, right? And then when you're selling, your stop loss is at the top. For example, you're in a buy trade now, and you set your stop loss just below, maybe let's say a zone, right? Now you see the price approaching that zone. What do you do? Now, beginner trader will be like, okay, before I hit my stop loss, let me like, expand the stop loss, and then you take it further down again. Instead of the initial price they intended to, set their stop loss, they now take it down again. And at the end of the day, price will just hit it and they'll actually lose more money because why? They move their stop loss emotionally. And then number three beginner mistake is over risking. Beginners they love to over risk because they always have this mindset of I want to make money quickly. I want to grow this account quickly. I have $10. I want to grow it to $1,000. They start over risking and over leveraging their account. So that is the third beginner mistake I make. Open a trade because the trade is going well, they stack multiple positions. That is over risking. Taking trades that is way bigger than your account. Your account is like, you have a $10 account. You're not going to trade gold that moves aggressively. You're not going to trade gold. Instead of sticking to pairs that actually fits that account, you're going to trade gold. Why? Because you want to make quick money. So that is another mistake beginners do make. Then the fourth mistake is taking trades with terrible probability. Now, this is another one. I had one of my friend, what he used to do back then. He tells me that the way he gets into his trade is when the market is showing printing green candles, then he's going to buy. And when the market is printing red candles, he's going to sell. That's just what he always does. So taking trades with terrible probability, without proper analysis. You don't do proper analysis, you just open the chart and you want to start taking trades. That's another beginner mistake. Right? And you could get your fingers burnt. And the fifth one is risking based on emotions. You're risking based on emotions, not based on logic. Now, one time I was in a trade and I think I funded that account with $50 and I grew that account to over $220 in a space of 3 days trading gold. And started risking based on emotions. I got into a trade, it was in profit. What did I do? Started stacking in multiple positions. Why? Because I wanted to make more money. The trade was actually doing well in profits. And then what happened? It started reversing against me. And in no time, I was in deep drawdown. I was in drawdown over $150 from my $220. And eventually I ended up closing the trade with an account balance of from $220 to about $70. That was so crazy. So risking based on emotions, that is another mistake beginners do make. They want we all want to make money fast. Now, before I take you guys to the chat, I have to tell you guys how to risk properly. That's the next thing we're going to be looking at. How to risk properly. Now, number one thing is risk only a small percentage of your account. Only a small percentage of your account. Now, it could be 3%, it could be most advisable, it's 3% per trade. So if you have $100,000, you're advised to risk 3% per trade, which is decent and logical. If you want to be aggressive, you can now say, okay, I'm risking 5 to 6% per trade. Yeah. But if you have a small account, I don't think you can be able to, calculate your position size, because you just have to go whatever risk the smallest amount of lot size is given to you. That's the risk you're going to take. So, for example, now you have $100 account. You have $100 account, yeah, and you do 0.01. Let's say it's a 20 pips. It's a 20 pips, trade position, and your stop loss is about 20 pips. Do 0.01, your stop loss is equivalent to like $20. But when you have a bigger account, right? When you have a bigger account, you can be able to size your position properly to actually fit your 3% risk model or your 2% risk model. That is the advantage of big account. But since you have a small account, you just have to go with a particular fixed lot size. And that is what I prefer. I prefer doing a particular fixed lot size because calculate position size calculation actually slows me down in my own way. It slows me down, right? Because by the time I'm calculating my position, calculating how many pips, what my stop loss value is, position size calculation is what we'll talk about in a later class. So by the time I start doing that, it's going to slow me down, and market moves tends to play out faster than you imagine. So I just have a fixed lot size for every trade. So if it's 0.01, I stick to 0.01 and go two entries, and that is it. For those of you who have been on my Telegram community and have been seeing my trades, that is how it is. Gold XAUUSD 0.01. I keep doing this until I'm comfortable, and then I move to a bigger lot size. That is what I do. So you with a small account, you can do 0.01, just one position and leave it. And then I do 0.01 micro lot size on currency pairs. Now, reason being is because gold moves aggressive, right? For those of you who have been trading, you know that 0.01 on gold and 0.01 on GBP it's the difference is very, very massive. The difference is much. 0.01 on gold and 0.01 on USD the difference is massive because gold is more volatile, right? So in order for me to balance my trades, I'm using a bigger lot size on currency pairs like GBP USD, GBP JPY, USD JPY. I'm using 0.1 on all those pairs. And then on gold, I'm using 0.01 now because imagine I take a loss on XAUSD of $20 and using 0.01, I can't be able to recover back that loss, right? So, but with 0.1, I can be able to recover that loss on XAUSD. So that's the concept behind it. That is the concept behind it. And number two, setting stop loss properly. Now, that is what this class is about. I'm going to teach you guys how I set my stop loss, what I watch out for, how I set my stop loss, what I watch out for, and stuff. So that is what today's class is about, setting stop loss properly. Then number three, stay consistent with risk percentage. Like I told you guys, if you're doing position size calculation, you have to stay consistent with it. If you're risking just 3%, you have to stay consistent with it. If you're using a fixed lot size, stay consistent with it. No, okay, I feel this trade is going to do well, so therefore, I'm using 0.01. Let me leave 0.01 and skip to 0.05. No, you have to stay consistent with it because trading is all about survival first. You have to survive long enough to make money. So it's about surviving first and then making money next. Because take it or leave it, the moment you fund your account and you be like, I want to trade, that money it no longer belongs to you. It belongs to me, it belongs to John, it belongs to Samuel, it belongs to the bank, it belongs to everybody trading, right? Because now what you have to do, you have to fight to keep that money. So that is why trading is all about survival first and then making money next. That's what follows. Now, if you can survive long enough, trust me, you make money in the long run. So that is what trading is all about. And then number four is trade probability, not certainty. Now, people have this mindset of they forget trading is a system filled with variance, right? They feel every trade is supposed to be a win. And if they're not winning every trade, they feel like they're they are bad traders or no. Professional traders do take losses. I do take losses. And sometimes the losses can come in a very, very long streak. I think I think last year, I think by November, December, I was in a very, very bad losing streak. Like I was losing back to back. I didn't even understand what was happening. I don't know what was going on. So times like that happens, right? To trader, and there are also times when you're on a crazy, crazy winning streak. Like right now, I'm on a winning streak, right? So that is what it is. So trading probability, not certainty. Whenever you have this mindset of the trade is a probable outcome, it might either hit my stop loss or it hits take profit. One is either going to play out. Now, once you have that mindset, you risk decently on your account. Once you have that mindset that anything can happen, take decent risk. That is why whenever I call a trade, or whenever I'm taking a trade, I always use proper risk management. And after that, after risk management, what next? What follows is trade management. Whenever you're on a trade, you don't just call trade and leave it. That's why over time I come back and I tell you guys, tighten your stop loss on my Telegram community. The link will be in the description so that you can join in if you want to be a part of it. I come back and I tell you guys, tighten your stop loss and break even. Why do I do that? Because anything can happen. You can be in profit and then price whipsaws and goes against you, hitting your stop loss. So you don't just take trades and then leave it. You trade probability, not certainty. So you always have this mindset of anything can happen. Yeah. So that is what trading is all about. It's a system filled with variance. So don't trade it or not come into the market with certainty that today I must make money. No, because when you do that, you tend to over leverage, and when you over leverage, it kills faster. So I cannot overemphasize on that. And then the fifth one is accept losses as part of the game, right? Losses would always come. There will always be losses, right? There will always be losses. So you just have to accept it as part of the game. It's always there. Accept it as part of the game. Losses would always be there. So all you just have to do is just have it. Like just accept it that okay, I take a loss today or I took a loss today. It's fine. It's part of the game. It's part of the process. Or keep going. So that is it. You show up the next day. Either even if you take a loss, you show up, you take a loss, you show up. You shouldn't get to your head. Now, let me leave you guys with this. Let me give you guys this. Whenever you're on a winning streak, whenever you're making money consistently, you shouldn't get to your head. And whenever you're taking losses back to back to back to back, it shouldn't get to your heart. Now, that's what I want you guys to know. Whenever you're winning, you shouldn't get to your head. And whenever you're losing, you shouldn't get to your heart. Now, I've been in trading space for about 3 years now. And in past 3 years, I figured out that whenever I'm on a winning streak, I'm winning, 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 winning. Now, the moment I start feeling like, yeah, I figured this shit out, right? Trading has a way of humbling you. So if you're winning, just keep it cool. And if you're losing as well, don't let it get to your heart. Because now, here's what happens. When a trader is on a winning streak, I call this cycle the cycle of doom of traders, right? On a winning streak, you place the first trade, you won it. Second trade, profit. Third trade, profit, 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 profit. Now, what happens next? The moment you take a loss, now this person is on a winning streak, right? And is someone who's using 0.01 lot size that fits his account, right? So takes the first trade, it's a win. Second trade, it's a win. Third trade, it's a win. He start telling himself, I guess I figured this thing out. Why don't I make more money by increasing my lot size? See when that thought comes, and just know that just know that something bad is about to happen. Now, the moment you increase your lot size from 0.01 to 0.05, for example, he has been taking trades, so he has been winning, right? He funded his account with, for example, $500, and he's making consistent profits from $500 for the past, let's say, 3 days. He has taken that $500 from $500 to like, let's say, $600, $700, any amount. He has been consistent with his wins. And the moment he start, he decides to over leverage, thinking he has figured out everything. And he over leverage, instead of using 0.01, he uses 0.05. And trade goes against him or whoever the person is. Now, trade goes against the person. That entire win you've made for the whole week, a single bad trade can wipe everything out. Now, he wipes the account from $700 that he has made, wipe it out down to like $300. Why? Because he over leveraged. He felt that trade. He decided to trade certainty, no probability. Now he has lost the money he has made, his profits, and more than half of his capital. Now it's about $200. Now, what does he do? He gets to his head. The losses gets to his heart. Now, what he starts doing. Now, it's called revenge trading. To some people, they think, okay, I'm not revenge trading. Now, it's called revenge trading. I want to make back this loss. That's even what kills you faster. The moment you start telling yourself, I want to make back this loss, I want to make back this money. Now, what do you start now? When revenge trading steps in, what happens? Over trading comes in. Now you start taking trades. Now, what did I mention earlier? I mentioned, you know, not trading with proper analysis. You don't do proper analysis, you start trading, you start over trading. Why? Because you want to make back the money you lost. That even kills you faster. You start over trading. You don't even follow your rules. You don't follow anything. You just want to overtrade. You feel every setup is the right one. Now, what happens? You take further losses. Now, the moment you start taking further losses, that's already gotten to your heart. You don't even know what you're doing again. Now, what then happens? You get scared. Whenever you see a trade setup, you get scared. You do not want to take those setups. Why? Because the trade you lost, you have been taking has gotten to your heart. Now you're blowing the account slowly and slowly. Now, for example, let me give you this scenario. The snake is crawling, right? And then it sees a saw. Now, what happens? It crawls over the saw cuts the snake. The snake gets upset that it has been caught by the saw. And what happens? He uses his mouth to bite the saw. And what happens? The saw cuts it further. The snake gets upset and wraps his body around the saw, thinking it's gonna, he wants to punish the saw. And at the end of the day, the snake gets its body shattered. So that is what happens once you start over leveraging, once you start trading certainty. That's what happens. Now, the snake wraps around the saw and starts squeezing it, thinking it's punishing the saw, but it doesn't know it's punishing itself. So that is what you're doing when you're over leveraging. You take a loss, a very bad loss, fine. Instead of learning from that, taking a break, learning from that, what do? You want to make it back immediately. There's nothing wrong in making it back, but what is wrong is doing it immediately at that moment. Now, what happened to me was funding an account with $50, great over $220 in 2 days. And I was like, okay, I figured this thing out. I started over leveraging. And I started multiple positions on gold. And the account equity grew from $220 to over $347, right? Now, instead of closing out and walking out with that profit, I wanted more. Greed stepped in. I started stacking in more positions, more positions, more positions. And what happened? Price started whipsawing against me. A trader was in profit, very good amount, very massive amount of profit, was now in a very, very deep drawdown. And I couldn't bear that drawdown. I was in a drawdown over $150, and it was still tanking, going against me. At the end of the day, the funny thing was that the trade actually went my way, but I've not in my history of trading back then, I've not been in a drawdown of over $150 before at once, like at once. So to me, it felt too big. I couldn't handle it. I had to close the trade. out of fear and panic of losing the entire account. And I closed out the trade. My balance dropped from $220 to $70. I got angry. I was like, I have to make back this money. I have to make this back. I have to make back this money. I started over trading. To the first trade, to the next trade, lost. To the next one, lost. Balance dropped. Balance was just dropping. Instead of walking away, I kept back over trading, kept over trading, over trading, over trading. And what happened? I blew the account. I lost everything. So I learned from that. So if you don't want to go through the same process, fine. Yeah, listen to what I'm telling you. But you want to go through it, or if you think, okay, I don't have right to tell you what to do. It's your account, it's your money. Fine, it's your money. Always drag me with you. Be my guest. You only learn the hard way. And then the sixth one is avoid over leveraging the account. I've told you guys. All right. Avoid over leveraging the account. So now I think it's going to be time for practical. I'm going to share my screen, take you guys to the chat. So I get to explain and walk you guys how I get to set my stop loss and my take profit to avoid being swept out by liquidity. Yeah, liquidity again. We've been talking about it lately. In the later class, we'll dive deep into liquidity. So I've explained to you guys in the previous session that liquidity is just the fuel that drives the market, right? It's fuel that drives the market. So if you want to understand it a bit, just go check the previous session. That is not what we are here for today. So I'm going to be sharing my screen in a short while. I'm going to be sharing my screen. Share screen. Hope you guys can see my screen. Hope you guys can see my screen, right? You can see it. It should be showing right about now. It should be showing. Okay. Okay, I think my screen is showing right now. So now, how do I set stop loss? Now, how do I set my stop loss? Now, let me take you guys to all these trades I've taken so far. Okay, let's use BTC. I think BTC is open. So let's do a proper analysis and let me set my stop loss. So now on BTC, let's go to the daily. Let me do my analysis. Okay, on BTC, I'm seeing an uptrend, right? Price go to this bottom right here. And since then, it's been uptrending, right? Broke this high, pushed up. So I'm expecting continuous upward push on BTC to the upside. So that's what I'm expecting. Now, since we've established on the daily, it's an uptrend, right? Now we go down to the 4 hour time frame. The 4 hour, what's our trend? Still, still an uptrend. Price broke above this high, came back to retest. Told you guys that whenever a resistance zone is broken, price flips it and it becomes support. Exactly what happens here. Broke it, came here, dropped, came here, dropped, eventually broke it, came back here, support, pushed up, came back here, found support again. Now it's going to the upside. So that is what I'm seeing so far. So you can see I have my zones marked out. Easy peasy. It's as easy as that. And the 1 hour, I'm seeing a continuous upward push. Now on the 15 minute, I go down to the 15 minutes to look for entries. Right, let me turn on my session break because I don't trade without session breaks. I've told you guys what happens or what I use session breaks for. Now, this is what happened on Saturday. This line demarcates every new trading day. So this Saturday activity, everything inside of this line is what happened, is what price actually did on Saturday. And this one was on Friday and so on and so forth, just like that. So what do I do? I take this horizontal ray, mark my previous day's high. Now you can see price rejected here. The W pattern pushed up, came here, broke my previous day's high. So what have I told you guys? Anytime price sweeps the liquidity above the previous day's high or breaks above it, I want to be trading. I want to be joining price to trade above the previous day's high. So this is where I would like to get an entry. Where will my stop loss be? Now, when setting your stop loss, you have to go, you have to, zoom out and look to your left, right? Where has price hesitated previously before? Now, you can see hesitation here. This is a zone. Price go here, pushed up, came back here, rejected, this dropped, came here, rejected, just like that. Look above it. Yeah. So this is it. If I'm going, I'm gonna set my stop loss just below this zone right here because price has hesitated here before. And I'm gonna target 1:2. And see my risk reward ratio shows 2. Perfect. You can see right here. That is it. Easy peasy. So what is price likely gonna do? Price is likely gonna drop from here. It's weekend, so there's not much activity. It's gonna be slow before going up. But I've taken the trade, but I don't trade during the weekend. It's part of my trading rule. So anything that happens outside of Monday to Friday, it's none of my business. Even if price should move 1,000 people in my direction. I actually saw this trade set up right here. When it was here, I think by 9 this morning when this W pattern just formed. This one. And if this was a weekday, I would have waited for price to break above it. The moment price broke here with this candle right here, this one I would have gotten in. This was when I would have gotten in right here with this candle. Only if this was a weekday. I don't trade during the weekend. And my stop loss, I would have looked to the left, whereas price hesitated just here. And my stop loss would have been below here. This one right here. So so I'd gotten in, I would have been in profit with about how many pips right now? Let's see. Where's current price? I think just about 2 pips in profit. Yeah. Where's our measuring to from here to here. Okay, BTC pips calculation is different. So as currency pair, it will just be about, I think this is about 20 pips. Yeah. And BTC moves different. So that is how it is. But eventually, let's say we met the market right here. So this is where my stop loss will be. And target 1:2. Now, if I see the trade cannot give me 1:2, I'm going to pass on it, no matter how juicy or exciting it might look. Now, now, how do I set my take profit? You can see this zone right here, this rejection, this drop, this created a very, very massive drop, with momentum. So I mark it out. So this is where my take profit level should be. This is where I should be aiming for. Already, it's already 1:2. So there's no need for me aiming for this high right here. You can also aim for the high too as well, because now this is how you set your take profit, right? This is how you set your take profit and how you set your stop loss. Now let me use Ethereum. I think Ethereum USD. Ethereum. I think it's open. So same thing on Ethereum. Go to the daily first. To my analysis, I can see an upward movement on Ethereum. You can see an upward movement. Let me mark out that rejection, a point of hesitation. See another one right here. Now go down to the 4 hour. Let me take a session break so you don't get confused. So on the 4 hour, I'm seeing kind of prices like rejecting, hesitating. It's just choppy, neutral direction. It's just ranging. Price is ranging. So that is what I'm seeing on Ethereum. And I go down to the 1 hour. The 1 hour, this is when I turn on my session break. Right. This is when I turn on my session break and I mark the previous day's high right here. You can see 15 minutes I look for entry. Right? That's broken it. And I'm gonna be looking for entry. Right now it's pulling back. So if I were to get in, I'll wait for price to pull back somewhere around here. So my stop loss can be just right here. I wait for price to pull back to the previous days high somewhere around here, so that my stop loss can be here, because this is the point where price is stated last. You can see price go here, rejected, pushed up. So this is where my stop loss will be somewhere around here, somewhere around here, and I'll target 1 to 2. I'm not going to be getting in right here because price is expensive. If this was a weekday and I was trading Ethereum USD, the moment I saw this break, the momentum right here, I would have gone in, stop loss, and would have been in profit a few pips away to take profit. So that's just how I set my stop loss. Let me use GBP USD. Let me use GBP USD. Which one have I not used? Forex.com. I think it's clean. I've not done analysis on this. So in GBP USD, on the daily, let's see what we have on the daily. On the daily, it's kind of ranging. Price is ranging, right? Price is ranging. Gets here to this zone, get here, drop, get here, drop, here, drop. Price heading back here. Now, since we know that price next direction is this zone right here. On the 4 hour, what's our trend? On the 4 hour, we can see an uptrend, a progressing uptrend forming high highs, high lows, high highs, high lows, high high. So I go down to the 1 hour. In the 1 hour, what's likely to happen? Now, let's say this was on Monday. Let's start from Monday because the market is currently closed. Now, I know that we are in an uptrend. Okay, this happened on Friday. What do I do? Just mark the previous day's high on Friday and I mark the low. So that's the lowest point price got to on Friday. This one right here. So it's the lowest point on the 1 hour. And I go to the 15 minutes. Go to the 15-minute time frame. What am I looking for? I'm looking for a break around 8 a.m. because that's when GBP USD move. That's when the banks in London are open. When price drops, break it. Okay, this is around 8 a.m. This is what happens. Now I sell. Get in here. Where my stop loss be? Last point of hesitation. Right here. Right here. Take profit 1 to 2. 1 to 2. You also zoom out to your left too as well. So you know where to put your take profits. Now, You can see price has gotten to this point before. So it's reasonable for price to return back to this point. You understand? So that is just it. The price eventually never smashed and take profits before reversing, but would have been in very decent, would have made decent amount of money right here. So the moment price dropped, pulled back and dropped again, finally, I would have tightened my stop loss. This is called trade management to the recent high. Drops, eventually I'll break even so that I won't be risking anything on that trade. So that is how it looks. And then on Tuesday, this is like the recent high of Monday, and this was the lowest point price got to on Monday here. You can see price just rejected on it, and I've gotten in. Okay, it didn't sweep it properly. It didn't sweep it properly, so I might have passed on this trade because so I always love price taking out either of these levels first before I get in. So I would have passed on this one because it didn't sweep it properly. And come to Wednesday, let's say it's Wednesday morning, mark Tuesday's high at the lowest point on Tuesday. I think this is what taking out. I think it was here. Yeah. And what happened? Price breaks above it. These are around 5 a.m., 5:39. Okay. Around 9, price broke above it, would have gotten in right here for a buy. Where would our stop loss have been? Price hesitated here. Just dropped it to this point because this is the last point of hesitation. This one right here. One is the two. Target one is the two. Would he have take profits? Nope. But would have exited. Would have exited. The moment I started seeing weak rejections around here, would have exited and would have made money. So that's how I trade day in day out. Set my stop loss. And this happened. Now this is the previous low of Wednesday. This is the previous low of Wednesday, and this is the high of Wednesday. This is the high. Yeah. So price never took any of these levels. So I would have passed on that day. And this was on Friday. As the previous day low right here. And this was the lowest point. Let me zoom in so that you can see. It was the lowest point price got to before the new trading day opened. And this was the high. This was the highest point. Now, what does price do? Price always sweeps liquidity to liquidity. Right? We got here, grabbed enough liquidity, pushed up, pushed up. Eventually, and came here to sweep this high. The market closed for Friday. So that is it. So let me show you guys. It's this other pair I've been trading. This is GBP US still. This one trades I've taken over previously because I didn't trade this past week. I didn't trade the whole of last week, right? Because it was NFP. I told you guys I have no business on the chart. I only took a trade on Monday that actually hit stop loss on gold. So I didn't trade. Now, what did I see here for this sell? This is a zone, right? This is my previous day's low. Price broke below it, and I waited. This is around 6. This break happened around 6:15, 6:30, and I waited up until 7:30, almost 8 o'clock, to confirm the move into a liquidity sweep. And I got in. That was my stop loss. Previous point of hesitation. Yeah, previous point of hesitation right here. That was and where was my take profits? I was aiming for this zone right here because I exited somewhere around here. So that's what I was aiming for. You can see the moment price got here, it reversed. So that was my take profit. So you should know your stop loss and also your take profit. Price must not always hit your take profit target. You should know when to exit the market as well. Over time, You guys get to learn that too. So this was the zone. This was the zone. Price got here, has always been hesitating, pushing up just like that. I knew that there was a lot of demand right here. So I knew when price gets here, it will push up again. So I think I exited this trade around somewhere here before it dropped and reversed. So that was it. And this one, what did I see? This was the previous day's high. Price broke it, dropped below it, came here, gave me like my double pattern kind of here, here, came back here. Now you can see all my confluences are aligning. I don't miss anyone. I always make sure I have a point of hesitation. I have my previous day's high or low liquidity sweep taking one of them. And I have to have my candlestick patterns formed too as well before I take any trade. And you can see it happened just here and I got it and everyone made money. So that is just how it is. Same thing around, same thing here, same thing here. This was previous day's low right here, this one. Okay. Now, why is this the previous day's low? Because this one, this low here never took this one out until the day opened. So I been price took it out previous day, which was on Friday, then I would have marked this one. But on Monday, this is where price opened. So this was the lowest point price got to on Friday. So on Monday it opened, dropped, came back, gave me like a double pattern. Not seeing this, I got into around 8 a.m. and this was I think this was even too much. Let me edit it. 1:2. I always go for 1:2. Yeah. And we closed in profit too as well. So that is just it. What I've said so far makes sense to you. I want you to drop number one in the comment section. We need GBP USD. What I've said so far makes sense to you. I want you to drop one in the comment section. One, okay. I guess it's making sense. Okay. Yeah. So that is let's do more examples. Let's do more examples. Let's do more example. Let's do more example. Let me share my screen. You guys can see my screen. Yeah. So which other? Let me see if I've taken any trades so far. Okay, let me go to XAUUSD. Let me see. Okay. Yeah, this was the trade on XAUSD on Monday last week. I told myself I'm not going to trade. Forex has one thing. The moment you go against your rules, you have to pay dearly for it. I told myself I'm not going to trade this NFP week. I have no business on the chart. Hope you guys remember when I said that in the last trading class. And this is what happened. Got in because wow, this was an A plus setup. What do I mean by A plus setup? All of my confluences aligned. I had a point of hesitation right here, this zone, demand zone, price, and I also had the previous day's low. Price came here, swept it, gave me a double pattern, indicating price is going long to sweep this liquidity at the top, previous day's high. So this was my target, 1:2. This was my target, this high right here. You can see it's around 1:2. What happened? Price actually swept me out, hesitated, congestion, push up, and eventually this was when the move happened. The move happened on Wednesday, the moment the market opened for Asian session. Is when this move I saw here was anticipating for here, or I was speculating for right here, happened on Wednesday. So that's what happens during NFP week. There's no true direction. Gets in, price fix you out, and eventually moves on a later day or that same day. So that's what happened. You can see this one too as well. This sell I got in here. Got into the sell. Where was my stop loss? This previous point of hesitation. Price got here, dropped, got here, dropping. So these are my stop losses. This one too as well. What did I see? At the point of hesitation, my zone, previous day's high take, previous day's low swept, W pattern. You can see it. Came here, the banks they grab liquidity to go in their long position right here. The W pattern. So you can see I have all my confluences now. Confluence one, confluence one, confluence one. I always make sure they all align before I get into a trade. Confluence one, previous days low, sweep, sweep. That is my confluence one. Previous days low, sweep, confluence two, POH zone, point of hesitation zone, zone reaction. That is as my confluence two. Confluence two. And then confluence three, a candlestick chart pattern. Seven. I'm staying right in mode. Confluence three, candlestick. You can see everything aligned. So that's what I look for day in, day out. If one is missing, I don't trade. Even if I see a W pattern on a POH zone, if I don't see a clear liquidity sweep, I don't trade. So that is how it was. Everything aligned, and then I actually got in. So that is what I look out for day in, day out. And let's see if I have another opportunity. If I saw another opportunity. Okay, let's just back test a bit on gold. Now you can see right here. Let me adjust this. Let me adjust it. You can see touched here, drop, touched off here, drop, touched off here, drop. I came here on Thursday, touched off here. Now, what was the previous day's low? Right here. Remember, I was zooming so that you guys can see it. Let me zoom in. Let me zoom in right here. This sweep beats properly. Nope, it didn't grab liquidity properly. And then when it dropped down, came back here, then I would have gotten in on this trade. But it did not. So I'll pass. Now you can see the candlestick pattern, rejection, conjection, conjection. It's already telling you the price is going to go up. But this sweep previous days low, so I'm passing on this trade. So I always wait for all those stuffs to align until they all properly align. That is when I get in. So if they don't align, I don't get in. So that is how it is. That is how it is. That is how it is. So if you have any pair recommendation, okay, before we call it today, let me just do my analysis. So I'm gonna let you guys know what I'm gonna be expecting for this coming week. Tomorrow is Monday, it's a new trading day. Let me do my analysis on every pair. And if you also have a pair recommendation for me too as well to help you check, let's do it together. Okay, XAUS, let me use a clean chart. Which one would I use? the past okay, I think this chart is clean. Yeah. So what am I expecting on XAUSD for this week? Let's go to the daily. Let's see what's happening on the daily. What's happening on the daily? Okay, on the daily, you can see this zone right here. This zone right here. I see price tapping up at this zone. So what is price ready to do? It's ready to continue the uptrend we've been in so far. Gold is in an uptrend. Forget this forget the pullback it's having. It's been an uptrend since inception. You can see where it started from. And there have been no downtrend, unlike GBP USD that goes up, come down. Gold has been in an uptrend. So I can't even go back because it's going to take a while. You can see at some point gold was about $1,700 per ounce. Now currently it got to the highest that's ever been, I think, about 5,500 per ounce, and it dropped. It dropped. Currently it's about $4,715 per ounce, and to keep fluctuating just like that, like that. As traders, we take advantage of these price fluctuations to make money. Unlike investors that buy it when it's cheap and then wait for it to like go up. Maybe an investor bought gold about when it was 1,000 per ounce and it's waiting for it to get like to 10,000 before it sells. But as traders, we don't do that. We just take advantage of price fluctuations and then we make money. So that is just how it is. So on the daily, I've seen that it's rejecting on my POH zone. So I have that marked out on the daily. If you go down to the 4 hour and I see that the uptrend is continuing, the 1 hour, the 1 hour is where I get to mark my level. The previous day's high and lows. Now, this is the previous day's high because today is Friday. You can see there's no line, but the moment the market opens in few hours, I think by 10 o'clock, 12, you see that a new line will form. So this is the new trading day, high and low. So once the market open to gap, and then if it takes any of this level, what I'm expecting is the price actually gap, come down here, react here, come back inside it. But in all, I'm looking to buy. I'm going to be looking to buy. That is what I'm going to be looking to do. Just buy. I'm going to be looking to buy. That's what I'm going to be looking to do. If price gets here, rejects, comes back inside my previous day's low, I'm going to be looking to buy. My target will be 1 to 2. That is what happens. It also still breaks above the previous day's high. Maybe it gaps up and test on it. I'm gonna be looking to buy so as well. Told you guys, if it closes above previous day's high, I'm buying. So this is my analysis. Buys on gold. That is what I'm looking for. Tomorrow being Monday, looking for longs. That's what I'm gonna be looking out for. I think the next target gold is coming through for the week is gonna be here. I think it's gonna take out this zone right here, this high. It's gonna take it out because if you can see, it's like a W pattern forming, and whenever that happens, whenever a W pattern forms, does this first leg, second leg, continuation, retest, continuation. That is how W patterns always move. After the second leg forms, there's always a pullback, a slight pullback before it continues further. That's how the W pattern is. If you're keen enough, you're gonna see it that whenever a W pattern forms, it doesn't just form direct. It forms second leg, it pushes, doesn't just go directly, it drops again before it continues. That's how W patterns are. So this is what I'm looking for. Price to take this high right here for further longs too as well. So I'm going to be longing gold, except it happens otherwise. Price comes, drops, comes back below this zone, which I doubt. which I doubt. So that's what I'm looking at for next USD. Then on GBP USD, music play charts, Pepperstone. I think I've not done anything on this. Pepperstone on the daily, seeing consolidation. Though, let's see the full trend on the daily. Though it's an uptrend, price is just stuck right here. It's hesitating. I don't know when it's going to be ready to break. But that is just what is happening. So on the daily, you can see price has just been stuck here. Now, in the 4 hour, you can see price is just attacking that zone. So this zone is a very, very decent key level. And people will pay attention to this key level the moment price gets there. A lot of decisions will be made around here. So what would I be looking out for? Now let's go to the 1 hour. Turn on my session break so you guys get to see it. Now on the 1 hour, you all agree with me that this is the highest point price got to on Friday, and this was the lowest point price was at on Friday. So what am I looking for? Sorry, I'm looking for a break of this level. So if price eventually breaks here, I'm not going to be longing because this is a very decent key zone, and it's very, very important because price has been stuck at this key zone. You can see it. So what would I be waiting for? I'm waiting for price. The smartest thing to do is wait for price to take it out, retest. Maybe this will probably happen like on Tuesday or Wednesday, and then eventually then we'll be in for the longs. That's when I'll be looking to buy. But right now, buying here, it's not smart because it might get here and instead of pushing up, drops again further, like it has always been doing, like we've seen in the past. Because as traders, how we do our analysis is whatever has happened in the past tells us what is likely going to happen in the future. So that is just how it is. Whatever has happened in the past is likely what is going to happen in the future. So in the past, we've seen that price has always played around this zone right here. Yes, the moment it gets here, it drops, gets here, it drops, gets here, and now it's approaching it quickly. So one of two things is likely going to happen. Either it's going to break or it's going to hold and price will drop. So I've noticed something in my little time of trading. I figured out something that whenever a key level holds, like a point of hesitation holds, 3 touches, the next touch, a price gets there. Price meets it again, it's going to be a break because the level is weak. Now, the more touches a key level has, the more weaker that level is. Now, because banks will be sweeping it out. They want to sweep the liquidity there because now, why is there liquidity? Because the moment it gets here, people are willing to sell because traders have this mindset that okay, price has gotten here, it dropped, it got here, it dropped, it got here, it dropped. So what are they expecting? They're expecting that exact same drop again. Now, figure it out. Whenever price taps a key level like 3 times, the fourth tap is going to be a break. So it's likely going to break this key level. I don't know, or it might still hold if sellers are stronger than the buyers. That is what I figured out. So I'm not going to be buying, I'm not going to be doing anything on GBP USD. GBP is a very, very sweet bet as well that I always look at. I love trading GBP I love trading GBP You can see after this dip, you can see price has just been funny. Price has just been funny. You can see these erratic moves, these massive candles. You can see it right here. I've been avoiding this pair because currently I don't understand what's happening. And as a trader, it's normal. Whenever you look at the pair and you don't understand, you look at the charts and you don't understand what's happening. It's best to stay out. Do not force things because you could get your fingers burnt. So I'm seeing a continuous up push. Now, why is that? This is a level. I'm seeing price coming back to take that level. Like I've told you guys, whenever price comes to reclaim a level, people will rush it. Traders will rush it. So this is a level. You can see price is taking has come back to reclaim the level. You can see weak rejection, when saying that buyers are rejecting this price. So that's just what this rejection stands for. And on the 1 hour, let's just mark our level. uh, you know, our previous high. You can see it's right here, and this is the low right here. Now, what am I expecting? Expecting price to push up like normal, reject, tap, and then I'll be long. So on GBP JPY too as well, I'm looking to buy. I'll be looking to buy on GBP JPY. That is my outlook. I'll be looking to do more buys on GBP JPY. That is likely what's going to happen. It's more likely to happen. Like I told you guys, trading is a system field variant. Right? We trade probabilities, not certainty. So this is more probable to play out buys based on my technical analysis, except fundamentals says otherwise, except the banks are stepping again to recreate this move they created here. What day was that? What day because that? Okay, right here, this move they created here, this one. Okay, this was on Thursday, 30th April. I said they decide to recreate this move again. But if that doesn't happen, then price is likely going to shoot up. So which other pair do I look out for? USJPY. USJPY. Let me quickly go down to the daily. I think it's already an hour plus, and we have to like rush because it's already over 60 minutes. I don't like spending more time than this. So on USJPY, what am I looking out for? Let me clear the chat so that we get to see everything properly. Clear, remove everything. So on USJPY on the daily, it's kind of tricky. Oh, this is a key level on the daily. This is a key level. So on the daily, I'm looking for more of sells because price go here. And if you can look at it on the daily, it's more like an M pattern. If you can look at it properly, M pattern, pullback. So we should be having a continuation pretty soon. So that's what I'm seeing on the daily. Then the 4 hour, we see the trend clearer what's likely happening. You can see on the 4 hour, price has just been consolidating below this zone, and then we had a drop. Go to the 1 hour, and I mark my previous day's high. Now, this is the highest point. I can also see a key level right here. Price has hesitated here, so I mark it out. Price has hesitated here. So what am I expecting? So I'm expecting one of two things to play out. Currently on this one, it's tricky. I'm expecting one of two things to play out. This is the previous day's low. Yeah. Eventually, if the market opens and price breaks above this, breaks above the high, then I'm going to be longing. I'm going to be longing, I think around this point. Yeah, I'm going to be longing around this point. But if price doesn't do that, if price does this, comes here, breaks above, close back inside the range, breaks above, close back inside the range, then I'm going to be shorting. I'm going to be shorting. My stop loss is somewhere around here, depending on market structure. That's how we set stop losses. And then my target will be this key level, 1:2. So just like that. So that's what I'm looking to do. One must play out. So that's what I'm looking to do this week. But for me, price is more likely to drop in the long run. But whenever on Monday for tomorrow, it should trend up a bit before dropping. So that is what I'm expecting. And what other pair do I trade? In BTC. Okay, let me do my analysis on BTC. On BTC, we've had an uptrend. We've been having an uptrend. Like I told you guys, I did it earlier. Uptrend. So we've established that on the daily we are uptrending. And in the 4 hour, we saw continuation, drop, retest, continuation. So 15 minutes, what would I be doing? Okay, you can see this trade, it's already in profits. It's in tiny profits after the pullback rejection. Now it's moving in profit already. You can see it's already in profit. So that's just it. So I'll be waiting. This will be this. I'll be waiting whenever the market opens for the new trading day because BTC isn't closed. To keep moving. It's open. It's a 24/7 market, unlike other pairs. Cryptos are 24/7. So whenever it stops and the new trading day opens, that will be my previous day's high, my previous day's low. So I can't mark it out right now because the market is still moving. For now, if I have gone into this trade, we will really make money from this one. So that is just by the way. I think I've covered. I think for silver, I don't really trade silver. Silver is just like a new pair. I just decided to, test out my strategy on, and so far it's been good. But I've not traded it. I've never executed any trade on it because, like I said, it's a new pair. So I need to build data on it. I need to understand its rhythm, how it moves, before I can comfortably take trades. And even if I say setup, eventually the setups they do play out, but I don't take them because I still need to build data on it. You can see this one, right? You can see this buy I spotted right here at this point. You can see how it played out. But I don't trade it because, like I said, I'm still building data on that pair. You don't just jump into a pair and start trading. You have to trade. You have to back test or trade it, like do your analysis on that pair for like a month, and then build data and study how many wins you got, how pairs move, what time he actually moves, so on and so forth. Over time, cover topics like that. So I think we've come to the end of today's class. I think we've come to the end of today's class. So I'm gonna see you guys next week Sunday by 6:30, not 7 p.m. 6:30 our normal time. That's when I'm gonna see you guys next week Sunday. So bye for now.